Good morning, everyone. I'm Alba Pich, economist at the tax department in BNFIX. Welcome to a new live breakfast with BNFIX. We regularly organize this kind of coffees to discuss some issues, some current issues related to tax, legal, or labor that are interesting for our clients. This time we have the pleasure to share this event with our colleagues in DFK International Portugal. We count on Augusto Paulino, tax department in Portugal, and Carolina Mateo, expert in international taxation, who are going to talk about the Spanish and Portuguese legal initiatives to attract tax residents. I would like, first of all, to introduce my colleague, José María Hinojal, audit department, who is going to talk a little bit.
Thank you, Alba. And as Alba said, I'm an audit partner, and I only want to mark two things. The first one is that this information that we are sharing with you today is general tax information. So in any case you need advising on these issues, don't hesitate in contact with us or with our colleagues in Portugal. And the second one is that any corporation in Spain or in Portugal have the same requirements regarding to audit and accountancy as a national company. So doesn't matter that the place where the owners come. And now I pass again to Alba. Thank you.
Okay, so before the starting, we beg you to silence your mic during the presentation. And we will have a question-answer session at the end of the presentation, but during the session, if you have any questions, you can place them in the chat. I hope you enjoy the session. Thank you very much.
Good morning, everyone. My name is Carolina Mateo. I'm responsible for International Taxation Department in our office in Barcelona. I'm very happy to share this space with our colleagues of DFK Portugal, especially with Augusto, who is going to share this information with us. And as José María was pointing out, we are going to provide with general information. If you need further advice, please contact with your advisor, because it's important that all the steps must be completed in order to register the companies. In this case, today we are going to talk about different aspects to consider for those companies who want to develop any kind of business or activity in Spain or Portugal. And first of all, we would like to talk about the documents that are required in order to register the company in both territories. In my case, I'm going to talk about the requirements to make the registration in Spain. The first thing that we have to obtain is the number of identification for the legal representative of the company. This procedure can be done through the Spanish consulate or embassy of the country where the company is settled originally. This process can take a little bit long because you have to gather a series of information that is listed in the web page of the consulate or the Spanish embassy. It's quite a lot of information, but it's quite simple to obtain it. It's necessary to make an appointment in the consulate or the embassy to provide with all the information that is listed in the web page. And then with that, we can obtain this number of identification for the legal representative, not for the company, but for the legal representative. Besides that, we will require also a power of attorney issued in favor of the Spanish tax advisors so that they can act on behalf of the company before the authorities, before the tax agency or the Social Security in case they have employees in Spain. Also will be required a certificate issued by the Register of Companies where the company was created, giving some information, for example, regarding the shareholders, those that own more than 25% of the shares, information about the legal representatives, information about the activity that is developing the company in their country, information about the address, all this kind of information that identifies the company and establish where it's settled and what activity is developing. These two documents, both the POA and the power of attorney and the certificate issued by the Register of Companies, must be notarized and also bear the Age Apostille seal to be legalized. This is a requirement that the authorities would require in order to register the company in Spain. Also required that all the documents must be translated into Spanish. The Spanish authorities won't accept any document that is not in any official language, in this case, Spanish. So we need to translate it. As I resume, we need the number of identification representative, the power of attorney in favor of the Spanish tax advisors. We need the certificate issued by the Register of Companies, all notarized and with the seal of the Hague Apostille Convention. All has to be translated, and we need to provide to the tax agency, to the authorities, with the original documents so that they can review them. They won't hold the originals. They will hold the copy, but they have to make sure that the copy that they own is the same as the original one that we are providing with. This process, it's not tricky, but it could take relatively long if we don't get the documents correctly issued. This process could take between 4 and 6 weeks, and this will also depend on the capacity of the company to gather all the information that we have been talking about. We from BNFIX, we accompany the enterprise through the whole process because we think it's important to make this accompanying so that the documents are correct and could be this process could be as fast as possible. Once the authorities have reviewed all the documentation that we have talking about, they would issue a number of identification for the company. This number of identification will allow us to register the company in all the authorities, both in the tax agency, both in the social security if the company has employees in Spain, and it allows us to start with the activity to be carried out in Spain. And now Augusto is going to talk about the requirements for the registration in Portugal. Augusto.
Hello, good morning, everyone. Maybe before starting with the registration process, just an initial remark. First of all, to thank BNFIX for the invitation to share this event with you. Also, thanks to the participants. It's always good to recognize some names and some faces here in the audience. And just also a brief introduction of DFK in Portugal. So we are a firm that provides audit, consulting and tax advisory services. And I am the partner in charge of the tax practice in Lisbon. So going to the process of registration of non-resident companies in Portugal. So there could be different reasons why a foreign entity would need to register in Portugal. It could be the case that it is to develop a business activity on a regular basis and needs to incorporate a branch or a permanent office here, or could be just because as employees and needs to register for payroll purposes. It could be for VAT purposes as well as a VAT registration. In any case, there is the need for registration before the national body, Registro Nacional de Pessoas Coletivas, to obtain a Portuguese tax identification number, and this is a process that can be fulfilled online, I believe. So one initial remark has also to do with the fact that we are not lawyers, so we do not provide legal or corporate and secretarial services in Portugal. It's something that only lawyers and law firms can do. Of course, I'm sharing some information that is based on our experience. And for tax purposes, apart from the registration with the National Legal Entities Registry, there is also the need, of course, to register with the tax authorities or with the Social Security authorities, depending on the situation, and also appoint a tax representative in case of entities, foreign entities that are from outside the European Union. In terms of documentation that is usually required, a power of attorney in favor of the legal advisors that will deal with the registration, a certificate of incorporation of the foreign entity in the respective country, and also information about the beneficial ownership. I will not dare to speak about timings of the process and costs, because as I mentioned, there could be different situations for a registration, and to be honest, it's not actually our area of expertise, but in brief terms, these are the requirements for a registration of a non-resident company. Maybe we can move.
Carol, your micro is silent.
Sorry, now. Sorry so much. Now we are going to talk about the difference in the taxation and obligations of the non-resident. And first of all, we have to determine if the company is going to have a permanent establishment in Spain or not. We find the definition of what we understand as a permanent establishment both in our internal law and the double taxation treaty. What it's stated in our internal law and both also in the double taxation treaty is that permanent establishment could be any place, any facility where the company is carrying out their activity in Spanish territory. So, for example, offices, warehouses, shops, this kind of establishments will be considered as permanent establishment in Spain. But also a person who is acting on behalf of the company, who has powers enough to close deals on behalf of the company, could be considered herself as a permanent establishment. Then when we have this differentiation between if we have permanent establishment or not, if we are considered to have permanent establishment, we will have limited liability on the income, on the benefit that we obtain through this permanent establishment. This means that we have to consider corporate income tax, and also we have to submit yearly information about our financial statements, our annual accounts, to the Spanish Register of Companies. Besides this obligation, that it's only for companies that are considered to have a permanent establishment, we will also have to consider other tax obligations related to this activity. For example, we have to submit the VAT forms to the tax agency regularly, quarterly or monthly, depending on the total revenue of the permanent establishment. Also to consider the withholding taxes and social security contributions related to the workers, to the employees that we could have in Spain. Besides that, if we are paying any kind of rental regarding our permanent establishment, we also have to consider the submission of withholding taxes related to those rental that we are paying. If we are getting interest, dividends, royalties from our mother house settled in other country, we have also to consider withholding taxes related to those kind of income. The difference between the taxation of a non-resident mainly consists in the obligation of submitting corporate income tax to have this limited tax liability on this income that we are receiving from Spain. If we are not considered to have any permanent establishment, the income that we perceive in Spain is going to be taxed in the origin country of the company. Besides that, we have to consider, as we have said, the VAT obligations, withholding obligations, social security obligations, if we have the workers, and other withholding taxes that it's different in every concrete case, so we have to analyze more in depth. Regarding the corporate income tax, our taxable period normally goes from the 1st of January to the 31st of December. The accrual happens on 31st of December, and the submission of the corporation income tax and the information to the register of companies has to happen during the month of July of the next year of the year we are referring to, the information that we are referring to. And now I would like to talk briefly about the different tax regimes that we have in Spain. Mainly we have 3 tax regimes. Currently, we have our general regime. We have another special regime for those companies that are new companies, new established companies or startups. And also we have special regimes for those companies whose main activity is the rent of real estate, of properties in Spain. For the general regime, we have a tax rate of, we have dispositions because of internal law modifications, and from 2023 and on, we can apply a 23% rate on the revenue if our turnover for 2022 is under 1 million euros. This is what we have regarding this general regime. If we are talking about startups or new companies or new creation companies, we can apply a reduction on the tax rate, so we can apply 15% tax rate. We can apply for that in the establishment year and the 2 following years of the activity. And also, both for the general regime, the startup regime, or the rental housing regime or taxable period, as we have said before, comes from the 1st of January to the 31st of December. And then we have, from the accrual moment, we have to let pass 6 months, and then we are able to submit the information regarding the corporation income tax. And we have 25 days to submit this information, both to the tax agency and the register of companies. The special regime of rental housing has several requirements that we have to meet in order to apply a bonification on the amount to pay equivalent to the 40% of this amount. We can reduce to pay in a 40%. We apply a 25% rate, the same as the general regime, but we have this reduction. What are the requirements that we have to accomplish to apply for this special rental housing regime? First of all, we have to have at least 8 houses in rental with intention of rental, with active intention of renting it. The second requirement is that the minimum rental period has to be 3 years. This has to be established in the contract signed between the parties. Also, we have to bear separate accounting register for each house. This is very important. This is a requirement from the tax agency, and also the composition of the income. At least 55% of the income has to be from a source of rental income, or alternatively, 55% of our assets must be comprised of real estate. And this is mainly what we have regarding the taxation of permanent establishment, if we don't have permanent establishment, and our special tax regime. And now Augusto is going to talk about the same things, but in Portugal.
Okay, so once we have a registration of a foreign company in Portugal, one of the main discussions would be around the existence or non-existence of a permanent establishment. According to the Portuguese law, the concept of permanent establishment is aligned with the OECD Model Convention, and in brief terms, it is also aligned with the description that Carolina it could be the case if a company has a fixed place of business in Portugal through which the company carries on the activity, and this concept of fixed place of business can entail different realities. It could be an office, workshop, a warehouse, etc. It depends, of course, the nature of the activity that is being performed, and it can also be the case to be considered as a company having a permanent establishment in Portugal. That is a first to what Carolina mentioned. And I don't know, maybe Sylvia can go to the next slide, please. Okay, so once a company has a permanent establishment in Portugal, and namely for corporate income tax purposes, basically such a permanent establishment would be treated as a standard corporate income tax taxpayer, meaning that the profits that should be put to such permanent establishment would be subject to taxation in Portugal, and all the obligations for tax purposes, namely with respect to corporate income tax, must be fulfilled, including preparation of accounts of the permanent establishment according to the Portuguese accounting rules, because the accounts of the permanent establishment would be the basis for the computation of the taxable profit. The permanent establishment would also be subject to the general obligations that any corporate taxpayer would be subject in Portugal, depending, of course, on the situation that is applicable. But VAT obligations, invoicing obligations, payroll, etc., withholding taxes, obligations, preparation of annual accounts, and annual return of tax and accounting information are all required to a permanent establishment. In case there is no permanent establishment, so if a foreign company has a registration in Portugal, but such registration does not qualify as a permanent establishment, in such case, corporate income tax would be applicable only in case of any income from Portuguese source, and it usually is on a withholding tax basis, meaning that the worldwide income of the foreign entity would be taxed in the country where the company is established. And the obligations of a registration without a permanent establishment will depend on the specific situation. For example, if it is a registration just for payroll purposes, it means that, for example, if the foreign entity has employees in Portugal working for the company but not acting on his behalf in Portugal or in the Portuguese market, the only obligations that arise would be related to the payroll. So to deliver the withholding tax that is due on salaries, and also to deliver the social security contributions. In other example, it could be the case that we have a registration just for VAT purposes. In such case, the VAT obligations would need to be fulfilled, namely filing the regular tax returns, invoicing according to the rules that are in force in Portugal, and etc. With respect to corporate income tax, as I mentioned, if the company does not have a permanent establishment in Portugal, there is no requirement to prepare accounts in Portugal or file corporate income tax returns. With respect to the main tax regimes for corporate income tax purposes, so assuming that we have a permanent establishment in Portugal. So there is a general regime. So the taxable profit is determined based on the accounting records. So that's why I mentioned that the accounts should be prepared in accordance with the Portuguese GAAP. And the general corporate income tax rate in Portugal, in mainland, is 21%. There could be reduced tax rates, for example, in Açores, Madeira. Additionally, under the general regime, there are also additional surtaxes, local surtax, which is charged by each municipality. And the maximum rate is 1.5%. And there is also an additional state surtax, and the rates could vary from 3% to 9%, depending on the annual taxable profit of the company, in this case, the permanent establishment. There are some specific with respect to the corporate income tax rate. It is 17% up to 50,000 euros of taxable profit. And there is also what we call a simplified regime, that it's only applicable to entities that have a turnover up to 200,000 euros. In such case, the taxable profit is determined based on a percentage over the turnover. It could be the case, for example, in case of services rendered, only 75% of the turnover is taxable, meaning that we have deemed expenses of 25% in basic terms. And I think that in general terms, this is the tax regimes, corporate income tax rates applicable to permanent establishments of foreign entities.
Now we would like to talk a little bit about the double taxation treaty and the treatment of certain income under the scope of the double taxation treaty and both our internal Spanish law. Spain has signed 103 double taxation treaty, of which 95 are currently in force and 8 are being processed right now. Talking about the taxation of dividends, interest and royalties that are paid or received between two companies that are settled in Spain and Portugal. If we talk about this situation, those type of income are exempt of taxation according to our, because we accomplish with the two requirements, the two basic requirements to apply for the exemption. One is that both the companies are subject to corporate income tax, and also that the two companies are settled under the European, in a country of the European Union or the European Economic Area. Besides that, if we have a double taxation treaty, normally what happens is that the tax rates are reduced according to what's established in the double taxation treaty. If we cannot apply for the total exemption because there are other additional requirements that we will see at the end, if we cannot apply for the exemption, then we have a reduced tax rate according to the double taxation treaty. And this is, we can apply in case of dividends, we can apply a 10% rate if the beneficiary is a company that owns more than 25% of the shares of the paying company. Otherwise, we can apply for the 15% rate. These are rates that are reduced. What our internal law states in other cases, if we cannot apply the exemption or if there's not a double taxation treaty, our general tax rate are 19% in case we don't have a permanent establishment, or 25% if we have a permanent establishment in Spain. Sylvia, next slide. If we talk about same, we have this exemption between Spain and Portugal. If we cannot apply for that exemption, we will see the requirements later. But we have a double taxation treaty. We can apply a reduced tax rate of 15% if certain requirements are met. And if we cannot apply for the double taxation treaty, our general tax rates are the same as for dividends. This is 19% or 25% if we are considered or not to have a permanent establishment. And finally, the royalties received can be taxed at the residency of the perceiver, but it also can be taxed at the source of these royalties. In this last case, in the latter country, the tax rate has to be maximum 5% if certain requirements are met. If we don't met with that requirements, we don't have a double taxation treaty, then the general tax rates are applied, and it's the same as in the case of dividends or royalties. We have 19% or 25%. And here we are presenting a table with all the criteria that we have in order to apply for the exemption. We have 3 different columns. We have the dividends, the interest, the royalties. The main condition that we have said before is that both companies are subject to corporate income tax in their respective countries. The other condition to apply for the exemption is that both companies are settled in a country within the European Union or the European Economic Area. This is the other requirement. And talking about dividends, the dividends that we are receiving could not be the result of the extinction of the company. If that's the case, we cannot apply for the exemption. And the relation between the parent company and the subsidiary has to be at least 5% of the shares and hold it for at least 1 year. When we talk about the interests, the requirements that we have to meet besides the corporate income tax or the situation of the company are that the main assets of the company that is paying the interest cannot be the real estate. This cannot be the main activity of the company. If that's the case, we cannot apply for the exemption. And also to consider that interest, the income derived from public debt and income from non-resident accounts is also applicable for the exemption. In case of the royalties, we have to, there are certain forms for companies that are covered in the Directive 2003/49/CE. When we talk about Spain, the annex of the directive is talking about sociedades anónimas, sociedades de responsabilidad limitada, sociedades comanditarias por acciones. If we talk about Portugal, the annex of the directive is talking about commercial companies or civil law companies having a commercial form, cooperatives and public undertakings incorporated in accordance with Portuguese law. If that's the case, we can apply for the exemption in this type of income. Also to consider that the payment of the royalties has to be to the final beneficiary. We cannot use an intermediary structure to pay these royalties, because if so, we cannot apply for the exemption in this type of income. And now to end, I would like to say that when we have a double taxation treaty and we have our internal law, always the double taxation treaty applies first, because always it's more beneficiary than what is stated in our internal law. But sometimes, like in this case, when talking about Portugal and Spain, our internal law states that those type of income are exempt. In those cases, when the internal law is more beneficial, we can apply for the internal law. Always we are going to apply the convention, the internal law, or the double taxation treaty, depending on what is more beneficial for the company. And now Augusto is going to talk about the same treatment, the treatment of this type of income in Portugal?
Okay, so just an initial comment with respect to the double tax treaties. So the general and before going to the double tax treaties, to let you know that under the Portuguese tax law, generally the income paid to foreign entities can be subject to withholding tax in case, for example, of services provided by foreign entities, interest, royalties, etc. If there is a payment to a non-resident entity, the general rule would be 25% withholding tax in Portugal. So this is the basis. Also, one comment with respect with the permanent establishment, because if it is the case that it is considered that a foreign entity has a permanent establishment in Portugal, I forgot to mention before, but if such permanent establishment has any kind of commercial relationship with, for example, the head office, all the transactions.
Augusto, I'm sorry, we cannot hear you. I think there are some problems with your...
Sorry.
Now,
Okay.
now, okay.
Now
it's okay.
Okay, now it's good.
I will try to go back a little bit to make sure that you don't miss anything. So I was saying that if there is any kind of transaction between the permanent establishment in Portugal and, for example, the head office or other group entities outside Portugal, those transactions should be treated as transactions performed between different taxpayers. And if there is a case of services rendered to the head office for the permanent establishment, for example, this needs to be taken into account that also the arm's length is applicable. So the transfer pricing rules, etc., it's something that is also relevant when we are discussing about the corporate income tax of a permanent establishment. With respect to the withholding tax that is due in Portugal on payments to foreign entities. So the general rule, as I mentioned, is the 25% withholding tax. Under the double tax treaties concluded by Portugal, withholding tax on services can be avoided. And withholding taxes on dividends, interest, royalties can be subject to lower withholding tax rates. So Portugal has around 80 double tax treaties concluded. With Spain, the withholding tax rates, as Carolina mentioned, can be 15 or 10% in case of dividends, 15% in case of interest, and 5% in case of royalties. These are the rules under the double tax treaty. But as also Carolina explained in more detail, there are other regulations that can apply in certain circumstances, and we can also achieve the exemption on withholding tax. It could be the case, for example, in case of dividends, we have what we call participation exemption regime in Portugal. There are some requirements. Of course, I will not enter into much detail, but in brief terms, if we are talking ownership of at least 10% for at least 1 year, we can pay dividends without withholding tax in Portugal. And this is applicable not only to beneficiaries in the European Union, but also in other countries with which Portugal has a double tax treaty that foresees the exchange of information. With respect to interest and royalties, also, as Carolina mentioned, there is a European Union directive, interest and royalties directive. And in case there is an ownership of at least 25% for 2 years, among other requirements. We can also have exemption of withholding tax on the payment of interest and royalties for entities that are in the European Union. That's briefly the regime for withholding tax. It is also important to note that to get the benefits both for double tax treaties or these special regimes, these exemption regimes that I mentioned, there are several formal requirements that need to be met, some forms that need to be fulfilled, and of course obtaining a tax residence certificate of the beneficiary. I think that covers the double tax treaty topics.
Okay, we have received a couple of questions regarding the issue that we have talked about today in the Café with Portugal. The first question that we have received is, how much could cost to register the non-resident company in Spain? This procedure can cost up to 1,000 euros, the whole procedure. And we, as BNFIX PICH, we accompany the enterprise through the whole process of obtaining the documents. Also, we provide with a sample of the power of attorney to be filled by the company. So we try to make this procedure as short as possible and to obtain the number of identification as soon as possible, because we make sure that all the documents contain the information that is required by the authorities. Also, we received another question, and this is regarding if the non-resident companies that register in Spain have to consider another obligations on other tax figures besides the VAT, withholding taxes, or the corporate income tax in case we are considered to have a permanent establishment. There are several obligations of giving information that we have to consider if we are developing an activity in Spain. One of these obligations would be giving information about the activity that we are holding to our statistics department. This is a body, an official body that depends on the tax agency, but also on the government. And they gather information about the activities held of all the companies, the non-resident companies, and also the national companies regarding the activity. So we have to consider this obligation. Also to consider if our turnover is going to be higher than 1 million euros regarding the activity developed in Spain. We have to consider the economic activity tax that would be charged if we accomplish with this, if we met with this requirement, that our turnover is higher than 1 million euros. So I think that's all. That's the question that we have. So we try to solve these questions. And if there's any other matter that you need information about, we are at your total disposal for anything you may require. And yeah, thank you, Augusto, so much for sharing this with us. It's been a pleasure.
It was a pleasure. And we hope that we had other opportunities to collaborate in
of
this
course,
kind of
I hope so. I hope so. I hope so.
Thank you very much.
Have a great day, everyone. Bye-bye.
Thank you. Thank you.